Good morning, ladies and gentlemen. This is Greg McCloskey, and this is a New York opening Forex commentary for FX Street. Well, there are three themes today. One is the euro dollar. The euro continues to come under pressure as concerns about the uh, Greek and Spain and Portugal and Italy start to snowball a little bit. What the markets economists and analysts are saying is that perhaps the ECB will have to do some more quantitative type easing, that is, purchasing of bonds of euro nation, the sovereign debt of euro nations, in order to really show the market that okay, they mean business, and that there's not going to be a run up in yields for these countries. It's going to just cause more issues for them down the road, increased costs, so on and so forth. And so there is that that thought out there that the ECB may in fact come in at some point or another and have to do this. But until they do, perhaps the euro is going to remain under pressure, and there's no guarantee that they will do. The second, obviously, is the UK election, which is increasingly looking like a hung parliament, and that has pressured the sterling to to a certain extent, not as much as the euro getting hit. And the third is the Reserve Bank of Australia raised their rates, but indicated that rates are more neutral now at the moment, and that has led to a decline in the Aussie versus U.S. dollar, and also the dollar strength is also helping that currency pair in its direction to the downside. So let's take a look at the euro versus U.S. dollar. We've had this chart up here, and we're showing that the market is ticking down to new lows here. In fact, we're making new lows for 2010. This old low, this is an hourly chart now, came in at 131.14. Currently price trading 131.06. Where might their target be on the downside? My next target actually comes in at the 130.88 level, and in order to see that, I have to go back to the daily chart. And if you go back in time, I go and find at the last time the market traded at this level was back in a year ago, actually, a year ago, almost to the day, well, a couple days before, but or after. But if you go back to April and March, and you look at these what I call remember prices, you can see how the market used this 130.88 level. Watch this line right here, and see all the different times the market kind of found support against it, found resistance against it, found resistance against it, found resistance against it, broke through it after finding resistance against it, found support against it, found resistance against it, found support, so on. Yeah, I mean, just look at that line. Look at it, all the times the market came down toward that level. And then we finally move into the present, and we break out to the top side. So remembered lines are lines that that the market remembers, and I do feel that that is our next target level at 130.88 for this currency pair. We'll see if the market does find support against that level. Below that level is 128.85 from the daily chart, and that obviously that's more obvious. That's the last low before the market really started to take off, and this is looking back at April 22nd, 23rd of 2009, 19, yeah, right. 2009, and that's another support level off the daily chart. Another area would be this channel support line. I'm going to zoom in here just to give you a better look at that. And if you look at that channel support line, that comes in at 130.57. So we got 130.88, 130.57, and 128.85. And I'm sure there's something else before 28.85 as well. So I'll have to look at that. But keep those levels in mind. Put a little lines on your chart. See how that support does indeed hold. On the top side now, now that the market has moved sharply to new lows here, or on its way to new lows, you have to start to use your Fibonacci retracement levels and kind of force them in there as we make new lows to see if we do have a any sort of retracement each time. You know, right now the market, it's too early to tell, but I'm looking for that 88 level to hold, and then we're going to looking for the 38.2% retracement. 130, 140 may come out to 130, 135 or so if the market continues on its trek to the downside. Who knows? But right now, my risk is too great for this pair. We're at too lower levels. I don't necessarily want to buy it unless I have a profit in the trade. That is, I'm moving I'm short already, I want to take some profit. Then I would looks to take some profit against 88 with a stop if the market goes below that level, because obviously the bias is to the downside for this currency pair. There is the other resistance on the top side is obviously going to be the old lows, and that came at 131.14. So right now the market is going to have resistance at 131.14. If we get above 131.14, then look for a move back up toward these high levels for the euro versus US dollar. Let's take a look at sterling versus US dollar, and that too is moving lower. We were forming this triangle formation here using the 100-hour moving average as resistance. You can see how clear that is. The market had a few little instances where the market got above that 100-hour moving average, and each time the market rejected that and then starts move to the downside. We found support against this trend line here. It's kind of stalled. This is also the 61.8% retracement. Then the market started to move down. Now we have support down at this low at 51.40, and the low for the year comes in 151.25. Is that the year? No, it's not the low for the year. 151.25 is the low for April. Going to the daily chart in the pound sterling, you can see here how the market has been much lower at 148-ish type area on the downside. So there is some room for the sterling to go to the downside. That's going, but right now the focus is really more on the euro. Sterling's going long, and we have the election, and that will become more of a focus later on in the week when we have the election. Everything starts to all the discussions on where the votes are going, so on and so forth, is going to come into play. The dollar Swiss, we're approaching the 50% retracement of this move from this low or from this high to this low. This is a 2009 high, 2009 low, and what is the 50% retracement level? 109.42. Currently price is 109.41, so we're at a key level for that currency pair. Additional resistance is going to come in at 110.17. That's this high going back to June of 2009. So from a daily perspective, we are at a key level for this currency pair, and you can actually see all the different highs here at that level as well. So key resistance here for the dollar versus Swiss. Go to the hourly chart, and we are extending the range to the upside. This old high for 2010 came in at 109.23. That's now going to be our support level. If the market can stay above 109.23, then we could see a push through, but I expect some profit takers up here, at least on the first attempt at the 94 level. Let's go to the dollar versus yen. Dollar versus yen has the upside resistance at the 95.08 level. The high for the day came in at 94.97. The 95.08 is a 61.8% retracement of the move down from the highs of 2009 to the lows of 2009. Just like the Swiss is approaching the 50%, the dollar yen is approaching the 61.8% retracement level, and it actually got within about 10 or so pips in the market, then started to come off of that level. And you can see here how the market just broke through back through the 56 level. This is giving more of a bearish sentiment as the dollar gets hit. If we get through the 35 level and then the 20 level, or right now, how I play it is or where the resistance is comes in at 94.56. The market's going to have to stay below 94.56. Next target on the downside is 35, and then the target on the 100-bar moving average, 100-hour moving average at 19.20 area. So these will be levels that the market has to get through in order to keep the bearish keep the car on the bearish highway and move to lower levels for that currency pair. So look for a resistance of 56 now. Look for a confirmation to get through 35, get through 20, and then move on down to 93.89 would be the next target level for the dollar versus yen. I mentioned that the Aussie versus US dollar, they kept their rates, or they raised their rates by 25%, but indicated that they're more neutral as far as their rates go. This suggests that the tightenings may be over, and we are seeing the market break through this old trend line. This is a trend line that held here 1, 2, 3 different times, or four or five different times, broke through on the top side in April, and now moving back below that trend line at 91.82. We'll look for resistance now at 91.82. Look for support against this bottom trend line at 91.23. Look for a move toward the 100-day moving average at 90.80. 180 on the downside for the Aussie versus US dollar. This is Greg Michalowski with FXDD with a New York morning commentary. Note that we do have factory orders coming out in the U.S. at 10 a.m. Also pending home sales coming out, but the bias is for the dollar remains to the upside. But the euro just tested key support at 130.88. May get a bounce. We'll see. Signing off. Have a great day trading. Bye bye now.